Welcome back. Just a quick check across Asia. Markets are obviously still down. The cuts, 7% still on Japan. You've got Shanghai down about 5.5%. Hong Kong is still down about 9%. Taiwan, 9%. So, yeah, it's tough. Not much changing there. Singapore is down 7% as well. It's a complete wipeout. And for us, so obviously, this means that the implied open has been indicating that we'll start at least with an 800-point plus sort of a gap down. There you go, 858 points. That's the Nifty implied open. Okay, so we know it's going to be a difficult opening, but what about individual stocks? There is a fair amount of news flow, and we have to, of course, get you up to speed with it. Our team is standing by with the CNBC-TV18 list of top stocks to watch this morning, guys. Morning to all of you. Abhishek, why are you watching out for IndusInd Bank?
Well, there is a business update that has come in for IndusInd Bank, and it looks like YOY weakest business momentum that you are seeing in last 17 to 19 quarters. And sequentially, the loan growth has declined for the first time in last 9 or 10 years or even more. So take a look at the deposits. They are up 6.85% YOY and about 0.4% sequentially. YOY, it's the weakest deposit growth that you are seeing in last 19 quarters. A calculation shows that the CASA in absolute value is down about 7.5% YOY and about 5.65% sequentially. So the CASA ratio is one of the lowest that you are seeing in last 10 years, that is 39 quarters or more. It has come in at 32.8% versus 34.9% in the previous quarter. Now the retail deposits, that's also shrunk for them by about 2% on a sequential basis. Advances growth very bad over here, 1.35% growth on a year-on-year basis and a decline of more than 5% quarter-on-quarter. So YOY, it's the weakest growth that you are seeing in advances for IndusInd Bank in last 17 quarters, while sequential decline is one of the highest that you are seeing in last 9 or 10 years. Calculation shows that the credit deposit ratio is at 84.6% versus 89.6%, which is a 9-quarter low, and therefore, can put pressure on the net interest margin in a high interest rate scenario. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Sudarshan. He's here to tell us about the news flow on Tata Motors. Morning, Sud.
Morning, Nigel. So Tata Motors has announced that JLR will discontinue its shipments to the US market. So in 2024, JLR in the US market sales had formed nearly 31% of its total volumes. Now CLSA believes that of total 31%, that 60% of the sales are for the segments that are priced above $85,000. Now, if that is impacted, CLSA believes that there would be a minor increase and there can be a 10% decrease in the volume. But the major impact will come in the price that is below $85,000, which is in the range of $50,000 to $85,000. Now, there the impact can be 50% fall in the total volumes. And if the total impact plays out, there can be a decrease of 25% in the JLR total volumes. Now, MS believes that if the auto tariffs remain, JLR could again go free cash flow negative in FY26 as well, and India's slowdown and weak FCF profile of JLR may take stock closer to its bear case price of 416. So it's a big fall that MS is seeing even from the current levels. And overall, I'm going with green for Tata Motors because of discontinuation of JLR shipments to the major markets like US.
Okay, Sudarshan, thank you very much. Just illustrates how deeply disruptive these small tweaks in numbers, tariff numbers, can be for individual companies. Thanks for explaining that to us. Let's go forward, talk about delivery. Manglam, what's the news here?
Well, Nimesh had alerted us in his D-Street chatter, and now it's come true, which is that they've gone ahead and made an acquisition. The acquisition is that of Ecom Express for close to around 1,400 crores in cash. Remember, this is an end-to-end technology-enabled logistics solution provider, which does revenues of almost 2,600 crores as of last fiscal. Delhivery itself can afford it. They have cash of close to 5,500 crore rupees in their books. So 1,400 crore acquisition is what is good for them. What's good in this acquisition? That it strengthens their command over e-commerce logistics further. And also it's at an 80% discount to the company's own previous valuation that was done. So Ecom Express was looking for an IPO that did not go through. From there, there's been an 80% write down on their value. So as a result of which, it's a deal at a good price. The other thing that we'll have to watch out for, however, is that Ecom Express is still loss-making. So how do they fix that is point number one. And secondly, nearly half of their revenues comes in from just one client, that's Meesho, and that too itself is reorganizing its distribution. So how do they navigate through that stress is another thing that we'll most definitely watch out for. But an acquisition at a decent value in the same space is positive for Delhivery.
All right, Mangal, thank you very much for that. So that is Delhivery in focus. Bajaj Housing Finance is the next one we're going to talk about. Abhishek is here with details. Abhishek, morning.
Morning, Prashant. So strong numbers with respect to the business momentum coming in for Bajaj Housing Finance. The securitization portfolio has increased a lot in this quarter. So take a look at the disbursements. They are up 25% YOY and about 13.5% nearly on a sequential basis. The overall loans have grown by 25.5% YOY and about 4% sequentially. However, the AUM growth is higher than the loan growth because securitization for them has increased. So AUM growth is at 25.5% YOY and about 5.9% quarter on quarter. So securitization book that has increased by 19% quarter on quarter, and this also helps in your net interest margin for the NBFCs. So overall disbursements to AUM ratio has remained steady at about 44.7% versus 45.7% in the previous quarter. So strong numbers from Bajaj Housing Finance. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's go back to Mangalam. There are a few quarterly updates that came over the weekend. Mangalam, tell us about Godrej Consumer as well as Nykaa.
Well, for Godrej Consumer, there has been sequential recovery. Remember, the third quarter was a very bad quarter for them. It was a washout, flat volumes. The company then said that they are focusing on improving volumes, and that's what they've done in the fourth quarter as well. Fourth quarter underlying volume growth will be in mid-single digits for India, and revenue growth will be in high single digits as well. This will be led by mid-teens volume growth in their home care business and mid-single digit decline in the personal care business. EBITDA margins, despite the inflation that we're seeing in raw materials, should be stable at around 20% as what we saw in the third quarter. That's because the company's gone ahead and taken some price increases in their soaps portfolio as well. And as a result of which, consolidated revenues growth seen in high single digit with mid-single digit underlying volume growth, seeing mild green in Godrej Consumer on the back of this news. But remember, there is weakness across the market. For Nykaa as well, near 30% gross merchandise value growth in their beauty business. That's a positive. We've seen mid-20s net revenue growth for their beauty business as well. Fashion vertical slightly weak because, GMV growth is in high teens, whereas fashion business net revenue is a lot more muted. So that's been the case for Nykaa over the last few quarters, where beauty has outperformed fashion because of the underlying weakness in consumer sentiment in fashion itself. Let's see how the street takes that.
Okay, all right. So Godrej Consumer as well as Nykaa on our radar. Mangalam, thanks for that. Let's go across to Vinny. Vinny, Metropolis also came out with its Q4 update. How's it looking?
So Metropolis, in terms of Q4 updates coming in, 10% revenue growth is what we're seeing, B2C revenue growth of 14%, and mainly this time the revenue growth is supported by patient volume growth, test volume, also that has seen an improvement, and in terms of product mix, that's seeing an improvement leading to better realization in terms of costs. Operating EBITDA, what the company is highlighting, maybe that could be marginally lower due to some bit of a cost pressure that they're seeing coming in, as well as a revenue growth from what they have seen in the last few quarters, it's a bit lower than that. Yes, they were reporting somewhere around this 13% growth. They wanted that also 13% growth when they spoke to us last time. But this is a 10% growth. But do not forget the industry overall also has performed bad. So in terms of the industry being weak is what analysts are highlighting. Metropolis has managed to see a decent double-digit growth of 10%. Other than that, core diagnostics, there's going to be a one-off this time coming in terms of costs as well on that front because the cost of acquisition for that. So that is also something that is impacting the EBITDA of the company. Company has cash of around 112 crore rupees at the end of March 2025, and core diagnostics, the EBITDA is at break-even at the end of this quarter, so that's interesting to watch out for. We're expecting some bit of a positive move coming in here, given that it's a decent number, but let's watch out for that.
Okay, all right. Thanks a lot for that, Vinny. Well, let's wind this down with Mangalam on Jubilant Foodworks. Their update as well, pretty good, Mangalam?
Fairly good, Nigel. You're looking at a 12% same-store sales growth for the Indian business, consolidated revenue of 34%, but then again, this includes the acquisition as well. So to that extent, standalone revenue is important, and there too, we've seen high teens growth, 19% growth out there. They've opened 52 new Domino's stores in India, closed 12, so net addition of 40, not particularly bad. Domino's Turkey is where a bit of problem is, where like-for-like growth has come in at just under 1%, and they've opened 8 new stores. The quarter in Turkey ended with 746 stores. We've been pointing out a turn in the QSR space, and it seems like for Jubilant Foodworks, it continues for the second consecutive quarter, a 12% like-for-like growth.
All right, Mangalam, thank you very much for that. IGL, back to Sud money.
Morning, Prashant. So IGL has finally announced a price increase for its biggest market, that is Delhi, which forms nearly 70% of its total volumes. IGL has announced that it has taken a price increase of rupees 1 per kg for Delhi markets. Now the new price is rupees 76.09 per kg. For other markets than Delhi, which form nearly 30% of its total volumes, for those markets also IGL has announced a price increase of rupees 3 per kg. So overall, this is positive, but market sentiment is negative. Do keep this in mind. And in Delhi, IGL has taken price increase for the first time since June of 2024. And for other markets, the last time price increase was taken, that was in November of 2024. But on the basis of news flow, I'm going with green for IGL.
Okay, all right, got that. Thanks, Sudarshan. Back to Mangalam. Mangalam, tell us about Kalyan Jewellers.
Good update coming in from Kalyan Jewellers. 37% revenue growth. We've seen gold prices rise. So as a result of which, these companies have seen their revenue growth come by as well. India operations witnessed a revenue growth of 39%. But the good part is same-store sales growth for Kalyan Jewellers has been 21%, led by robust wedding demand. And they've launched 25 new Kalyan showrooms in this quarter itself. Middle East saw a revenue growth of 24%. And they've launched 14 Candere stores as well during this quarter. More importantly, in the first quarter, we have triggers like Akshay Tritiya and the wedding season. So let's see where that goes as well, especially given the correction that we've seen in Kalyan Jewellers' stock price. The other factor we need to keep an eye out on is the big decline from highs on gold prices. Could that impact inventories for a lot of these companies or not is something we'll be tracking closely.
Okay, all right, got it. So some positive updates coming there. Let's see if they give us a bit of a green hue at all. Thanks, Mangalam, for that. Quick recap of our list then. Stocks with positive news flow include Delhivery, Bajaj Housing Finance, Godrej Consumer Products, Nykaa, Metropolis Healthcare, Jubilant Food, IGL and Kalyan Jewellers. Stocks with negative news flow, actually only two, Tata Motors and IndusInd Bank because of its Q4 update. Okay, that's our equity list for the morning. Let's go back to the global picture and see how commodities are dealing with the Trump tariff tsunami, as I'm calling it. Manisha, good morning. What a weekend. What a Friday, right? I mean, everything's sliding. Oil and even gold, for that matter, fell off a bit.
Well, yes, it did. And I'll start with gold first. And it's majorly because investors have offloaded gold to offset losses in other asset classes. We did see gold prices fall below 3,000 as well in the early Asian markets, but there is some recovery right now on opportunity buying. The statement from Powell suggesting that the Trump new tariffs are larger than expected and the economic fallout, including inflation and slower growth, are likely. That led to some buying coming in for gold, but not the other commodities. They have continued to decline. I'll start with crude oil prices, which are down 3% in Asia right now, and this is after 15% of a decline in the previous week as well. So there's no stopping this one. Even Saudi Arabia has cut official prices for the month of April and May for its Asian consumers, looking at where the markets really seem to be heading. It's unsettling because these are tangible commodities, and this is unsettling for markets and companies as well, with such high moves in the underlying commodities itself. Copper, for one, started Asia 5% lower. Right now, it's trading 0.5% on the higher side. So that's the kind of move that you've seen in the last 2-3 hours coming in for copper. Very large moves here as well. The US-China trade tensions have impacted other metals as well. You have nickel trading at 4.5-year lows, aluminum prices at 7-month lows, zinc prices trading at a 9-month lows right now. So some more slide continuing for many of these metal prices.
All right, Manisha, thank you very much for that. I mean, it's all going in one direction, which is southwards. We'll talk about metals as well in some detail. We have N. Jaikumar of Prime Securities joining us with some ideas and some thoughts. So that's the conversation coming up in just a bit.